and political issues that will affect your portfolio. Keeping you informed of the latest financial news and trends in investing, trading, real estate, and business. This is Wealth and Wisdom with the Market Guys. Here are your hosts, Rick Swope and AJ Monte.
Hello and welcome to another episode of Wealth and Wisdom. I'm AJ Monte. In the past, Rick and I have brought to you a very nice list of professionals, many of which were attorneys, money managers, fund managers, stock pickers, newsletter writers. But today we have a special guest, and Rick, I'll let you do the honors.
Yes, AJ, today we have joining us a gentleman. His name is Kai Tao. Kai is the founder of Asgard Capital Management, LLC, a New York City-based institutional investment firm. His style of investing will appeal to many of our viewers in that he'll help build the bridge between a good, sound fundamental analysis and really where our background comes in a little more strongly is the technical analysis side. So we're going to bring those together today. He's come a long way to join us in the studio today, and I'm sure you will enjoy his views in the markets. Kai, welcome to the show.
Thank you
for joining us. Now, we were talking before the show a little bit about your background. We were reading some of the bits and pieces and noticed that you started at Massachusetts Institute of Technology with a background in, I understand, mechanical engineering. I have to fess up that we're recovering engineers ourselves. AJ's...
we love the numbers.
You know, in the technical side of the markets really draws the technical, more technically oriented people. I'm interested, though. How does one make the step from mechanical engineering as training into the type of work that we're going to be talking about today? Just maybe kind of give us a little bit of a flavor for where you've come from in the background.
I think the important skill set in understanding investing is really thinking of each company as a product-driven company, that there's more behind a 3-letter ticker symbol or 4-letter ticker symbol.
Right.
And so with a mechanical engineering background or anything where you have analytical skills, it helps you evaluate the opportunities that are sitting around you on a daily basis.
So it's really, you have an objective and you walk through the process of figuring out where you're going to get to that objective is what I'm hearing you say.
Correct. What you're trying to do is you're trying to lay out a clear roadmap of getting you from point A to point B and understanding what roadblocks are potentially along the way. And that way you have a clear plan before it happens. And so you're not affected as much by a lot of the noise that comes in between.
Great.
You know, today what we're going to do is we're going to talk a little bit about your style. We're going to talk about the importance of looking at the company both from the technical and fundamental side and using that as really a risk management base. And then we're going to, in the second part of the show, actually go through some case studies and a couple of stocks that you've picked. Okay. If we could start with what goes through your mind when you're first looking at a company, because I know before you put your money in any firm, I understand, and correct me if I'm wrong, you actually interview the management team, is that correct, and many times?
Correct. Our process is a very call-intensive process, and where what we try to do is after we've screened our list of companies that we want to potentially invest in, we will go and interview the management teams and try to understand the business strategy behind the company. The key thing is to have the management lay out a roadmap for how they're going to excel over the coming year. And so what we've laid out is a series of questions, general questions as a framework that anyone could potentially ask when they want to evaluate a management team and evaluate a company.
You're taking it a step further than most people are going to. You're getting on a plane, you're going to go kick the tires, and you're going to see if these people are going to be worthy of your investing in their companies.
Well, actually, the individual investor can actually do it in their house, and where, believe it or not, the management teams are very happy to speak with investors. They have professional investor relations departments in case the chief financial officer is not available. But if you just give them a call and you say, you know, I'm interested in investing in your company and I have a few questions that I'd like to answer, they'll spend, 30 minutes of their day to speak with you. And that's what a lot of people don't take advantage of the opportunity to do so.
What kind of information would somebody, if they were to do that, what kind of information would somebody get from a call like that you wouldn't get from, say, going to Yahoo and looking at the profile information and seeing the ratios and seeing the summary reports? What sort of insights might people be looking for from a call like that?
The way I look at it is, if you look at the numbers, it's almost like a report card. So you know what your grades are. Right. However, you never understand. In school, a lot of times when you get your grades, sometimes you perform better and sometimes you perform worse, but it's not always to what your true expectations are at times. And so when you speak with management teams, you're trying to understand the story behind the numbers, what's behind the report card. And so you want to get a flavor of what the strategy is, what's happened over the last 6 to 12 months, and what's going to happen over the next the forward-looking 6 to 12 months. And the best way is to, when you speak with them, you ask questions that relate to the overall strategy in terms of understanding the business decisions that they made over the past 12 months and what's going on over the future. For example, the things that we look for is we look for any major deals that they've won or lost in terms of business prospects and trying to understand why they won or lost those deals. We also look for the operating model in terms of understanding where the leverage in the business is going to come from. Because where a company is truly going to excel is when their revenues accelerate, and because they have fixed costs, they're going to drop more money to the bottom line. And so our investment methodology is focusing on a company's business cycle through understanding the supply chain. And by understanding each of the component of where they are in the business cycle, you're able to better evaluate the company's prospects going in the future.
You mentioned about the contracts, but in terms of growth, do you have a preference between a company that is focusing more on organic growth versus acquisitions, or is it company specific, just depending upon their capability of how they can manage an acquisition?
It's generally company specific, but I prefer organic growth because it means that the company is actually innovating from within. A lot of times when you go with acquisitions, it becomes more artificial, where a company has to constantly feed the engine, and when it doesn't feed the engine, you know, the game stops, and so it becomes more difficult.
Let's take some of our viewers through some of the steps. Let's say someone wants to adopt your style of investing. They like what they hear about you going out there and talking to the management team. I understand from what we've gathered that you have an acronym that uses FACTS, in other words, facts.
Facts, sure.
Tell us a little bit about how that works and how our viewers could also use that for their own investment strategies.
Sure. FACTS basically stands for financial, accounting, credibility, timing, and sector. Now, financial accounting basically implies a lot of the typical financial ratios where you can derive from a Yahoo or from a lot of the public websites. And the key thing is to evaluate the trends. You want to see how historic trends have been going, where the margins are going, where the leverage is going to potentially come from, where they're investing the capital. Are they investing in R&D? Are they investing in sales and marketing? But when you start going to credibility and timing and sector, these are the crucial factors that really distinguish and help you fine-tune when you invest in a particular company. On the credibility side, you basically, each company on a quarterly basis, when they announce their earnings, they also have a conference call that comes with it. And so by reading the conference call, usually you can listen to the conference call or subscribe to a conference call transcript service where they'll actually print out the actual transcript of the conference calls. And the company will evaluate their performance. Well, if you go over the last 4 conference calls, you can start seeing the goals that the company has laid out for themselves and how they performed up to it. And that's why I call it the credibility factor. If a company is constantly under-promising and over-delivering, you know that this is a company that you can trust. If they're not, you know, there's a lot of companies also that over-promise and also under-deliver, and unfortunately, you know, people participate in those at times, and that becomes a perennial problem.
In what priority do you sort these letters out? For instance, is accounting more important than credibility, or vice versa?
Well, I think ultimately credibility is results-oriented, and it's what you prove. And then you factor in with the timing and the sector. The timing is where you incorporate some of the technical tools to help you fine-tune what I call is when you're going along the roadmap, if it's in the middle of the night, you need a pair of headlights, and you know the technical tools is like your pair of headlights to provide you better guidance along this road. And then on the sector is basically because you know, different sectors will have their different moments in the sun. You know, because companies all go through different cycles and product cycles. You know, certain sectors that are hot at one second, you know, oil and gas, people, right now, energy is the hottest sector, but people forget that oil was at $10 a barrel in 1998, and no one wanted to touch it. And so, you know, if you have to constantly adapt and find the opportunities by, you know, by reading what's industry journals, reading the papers, and kind of get a sense of the environment that we're in, and then fine-tune it by speaking with the companies to help you direct in the right direction.